Good morning, everybody. It's Christian from Serene Education with the 4 majors notes update for the 28th of November 2013. Okay, today US news, none bank holiday for them as they are celebrating Thanksgiving Day. So liquidity for the US session will be null and void. So we are pretty much reliant on this morning's European movement, and then we should see price just fading away or just moving with price. That's moved this morning. So unless you're trading the Canadian market, the loonie, then we have current account figures later this afternoon, which they're expecting a slight better figure. And if you are trading the yen later on this evening, there is news in fact, but nothing for the US market, only for the European session. So we're starting with euro against US dollar this morning on the daily chart. Just looking at yesterday's candle, very much a indecisive candle. Apologies. More selling sentiment at the bottom of that candle at current resistance. We had Tuesday, Wednesday resistance last week, and further hesitation throughout the start or the end of last week. And then yesterday's candle, we saw buying pressure to the upside for the first part of the day. However, by the end of play, we saw prices pulling back. You can see that this candle here being an indecisive candle, and the candlestick sentiment favoring the downside. So if you had to take that candle over there and to dissect it or put a 50% retracement level through that, you will notice that there were more selling contracts on that than there were buying. However, you can see that the long-term sentiment on my indicator is still telling me to look for upside. The weekly here, a bit of resistance coming through, primarily because price has not been able to break the current resistance level here, i.e. the weekly fib level on our daily, which will then make our weekly chart look a bit consolidated, which it is doing at the moment. We still have everything in our favor nonetheless. We still have a blue arrow, blue candle, RMOs above, Osmo indicator above, and our RSI that I've just plotted for some of our students just to show them that the sentiment still is higher. So the only candle that is going to actually cancel this negative candle here that we saw on yesterday's daily range is a bullish engulfing candle, and you can see the sentiment intraday right now was we are seeing daily upside. You can see the daily chart over here. Everything is positive, so we should be looking for buying opportunities. However, I'm gonna wait to get a clear confirmation from the market. I don't want to be speculating. This is an exhaustion candle on its own. Okay, I want to see a nice daily engulfing candle to precede this indecisive candle at a price support and resistance level, i.e. my 23.6 on my weekly fib. Get that, then I can then target the upside for the foreseeable future. If we do get above this weekly fib, then I can target my monthly fib high, which is 254 pips away. Very, very important. There might be a slight consolidation in and around here, but overall, long term, we should be heading back up towards this prior resistance level high that we saw in October just recently. That will be my next target. However, I don't want to speculate. I'll rather wait for the market to give me a clear direction. Yesterday, I think a lot of people would have actually caught out of here. His price moved higher and then got suckered in when price pulled back and all their stops would have been taken out. Don't want to be that sucker. So I'd rather wait for a nice bullish engulfing candle break higher. Then it'll allow me then to tap into this without any hesitation, without any speculation. I can just look at my indicator chart. The more it breaks higher, the longer this is going to start looking more positive for me, and the outcome for me is going to be a lot better without any risk involved. So that is what I'm waiting here. Daily chart must see a bullish close above 23.6 fib. That's what I've written on my chart, and that is what I require from it. So I'm not going to go on any further with that. Moving on to sterling. Happy days yesterday, fantastic. We're expecting some really, really good quarter-on-quarter figures. Second estimate of quarter figures for the sterling for GDP and the GDP figures, and sure enough, we did get them. What did it do when we got the news? Is breakouts. And that breakout has now broken a major 2-month high, and by doing so, now you can see we had a pullback on the US data. The US data was quite positive, which pulled sterling down after the breakout, which is not a problem because with any breakout you'd expect a pullback, and the US data news later yesterday afternoon actually pulled sterling back. However, it's still maintained above the price support and resistance level high, and now we had a breakout, pullback, and now you've seen that follow through. The continuation follows through now. You can see my indicator box over here smacking. It's just positive all through. You shouldn't be looking for any selling sentiment as long as price can maintain above this price support and resistance level here on the weekly. Target my monthly 38.2 level above. which is where price is trading right now, to that level, roughly around 80 pips. So nice little return. It's tight, but you can still you can still walk away with a slight profit from that. So look for nothing more than buying opportunities intraday for that particular pair. US dollar Swiss franc here also. The first part of the day, a lot of selling. We saw price actually falling below the current 4-day support level. You can see that price is still making swing lows, which is still negative. You can see the indicator box over here still very much negative. If the euro US dollar is positive, then you'd expect the US dollar Swiss franc to be negative. No brainer. Okay, if you don't know that, learn it. Okay, because you have two genuine trades just by looking at the setup. So support level. Okay, yesterday's candle, a fake out. A lot of people here would have who don't know how to trade would have actually been caught in this to the downside, and then actually got stung as price pulled back and closed them out and stopped their positions out. We wanted to see, this is 1, 2, 3, 4 consecutive days over here. It would have been far better, and this is what I required from it. I didn't trade the US dollar Swiss franc yesterday because I wanted to see a bearish engulfing break. It's got to be engulfing, it's got to be a break, because it's confirming sentiment drive. Don't get it, no trade. It's that simple. And that's what happened. I had a hammer-like candle forming. If I just zoom so you can see it, it's almost a hammer on prior 4-day support. The only thing that's going to cancel this hammer formation, which is a positive candle on a support level, is a bearish engulfing candle. And if I get a bearish engulfing candle, then I should be looking for lower swings. Why? Because my indicator is telling me I should be looking for nothing but selling opportunities. Therefore, selling with market trend long term. That's what you want to be doing. Okay. The only if this is to be a true hammer, then we want to see a bullish engulfing candle close higher than the 38.2 here, which is then going to form a nice morning star, which is going to be a very strong support platform. And the stronger the platform here, the higher you'll build, and then we could look to target the upside. However, I am still looking for my number one, which is negativity. The candles, the actual indicator box is telling me negativity, therefore I will look for it. The candle yesterday, however, did not close negative. So that was just a consolidation. So I'm looking for a bearish engulfing candle to cancel this positive consolidation candle here. Until I get that, then I'm not trading this until I get it. It's that simple. US dollar Japanese yen. What I wanted, 4 consecutive days of negativity or indecisiveness. I did mention on a couple occasions I want to see a bullish engulfing candle. The only candlestick that was actually going to cancel this negativity over here was a bullish engulfing candle. And what did we get yesterday? A bullish engulfing candle. So am I happy? Hell yeah. Why does it do that? Because now I can start looking towards my weekly fib to the upside here, which is a healthy 152 pips away. Then I can look to my monthly, which is 335 pips away. There's more than enough. It's done exactly what it needed to do. Give me a direction in the long-term trend. Long-term trend was positive. I just had to bide my time. These candlesticks over here, the longer it went sideways with negativity, because you can see they're all closing on the bottom of the candlestick pattern, that would have eventually led to negativity playing out, and price would have pulled back. However, you can quite clearly see bullish engulfing candles now taken away all of that negativity. US data yesterday really pushing price higher, which is great because you're still making swing highs. Then we should still be looking for higher highs and profits in the direction of the long-term trend. Fantastic. RMO above. This is nice and green. Blue arrow right down the bottom of here. Candlesticks are blue. All the moving averages below price. RSI is telling me I should be looking for. Yes, it's going into the 70 range, but it's a nice strong trend to the upside. So therefore, I should be looking for higher highs, nothing more. Okay, there we go, guys. Short and sweet, to the point. No bullshitting. Excuse the French, but that's how it should be. Very mechanical in your approach, and your outcomes will be a lot more positive. You'll be a lot more effective in your trading, and you'll be profitable. That's why we trade. Okay, we don't speculate. We just trade what the market tells us to do. Back it up with some money management rules, and you're on a winner. Okay, I can't get any more simple than that. It is simple. The approach of this template is very, very mechanical, and it makes it a lot easier for us, the trader, to get or to find those trades that are moving with genuine sentiment. So I'll leave you with that. Just be aware there is no US market this afternoon because they are celebrating Thanksgiving Day. So don't expect any movement or sentiment volume this afternoon because there won't be any. So trade this morning session and leave it for the following day. One big thing, this morning we had GDP quarter-on-quarter figures for the Swiss franc, and they came out as expected, which is also great for the Swiss franc. So see if you can see any negativity. That will play through on our Swiss franc, and that will drag price low for the US dollar now, which is great because then it'll give me my bullish engulfing candle, and that will then form a nice juicy swing low, and I can target my all-time lows down the bottom here, which is a healthy, let me get this right, roughly around 133 pips away. So I'll be more than happy to take that if I get that bearish engulfing candle closed lower. I'll leave you with that. I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.